Hi, it's Baldwin Burgess, and I'm here with Mark Mobius. How are you, Mark?
How are you? Good.
I'm great, thanks. We're in Monaco at the FundForum International 2013, and it's kind of nice to sit down with Mark. Mark is a frontier market investor, emerging market investor, very well known. We are also a bit of a frontier market investor, less known, so I'm really keen to have the opportunity to talk to you and pick your brain on a few
Thank
things.
you very much.
I enjoyed your presentation. As always, what I really appreciate about the way you deliver the message is you actually deliver it in normal language. So we always pick up a lot from that.
Thank
I
you.
think and managers should learn to speak more in normal terms. It's the when everything starts making sense. And so I think you touched on a few very interesting points, and I would really like to know your opinion on something that's been on my mind for some time. So developed market investors, that is if we want to call these developed markets, they trade in and out of emerging markets and frontier markets.
Yeah.
Every time there's a trade out, what we see that there is usually always a bigger and bigger domestic investor base left. I'd like to know your views on the domestic investor base going forward. Do they need foreign investors going forward? Is that going to be a theme?
Well, it's interesting. I think you need the balance. And it's interesting that the Chinese realize that, which is why they're cautiously allowing the foreign investor to come into the Asia market, which is referred for the domestic investor. And their purpose, and their stated purpose, is to bring in more experienced investors, to particularly fund managers who are supposed to be more experienced. They may not be that more experienced, but anyway, we will try to be experienced and invest in a professional way. And that's what they would like to bring into the market, but they're afraid of doing it too quickly because of foreign exchange controls, all the rest of it. But there's no question that in markets where you've had both, you've had the domestic and the foreign investors, it's been good. Because very often, the foreign investor will go in where the domestic investor is going out. They don't necessarily think in the same way and move in the same direction. But what is most critical now is the rise of pension funds and sovereign wealth funds. You're seeing that, of course, in the Middle East, you have enormous sovereign wealth funds, but in places like Poland, Chile, all these countries have growing and big pension funds.
And insurance companies, because there's more premiums in the system,
Exactly,
right?
more premium insurance companies in the fixed income market in particular.
Right.
But in the equity market, to give you an example, in Chile, they grew too big. The pension funds grew too big for the domestic market, so they had to go out. So we're now in a nice position where we're selling them our funds, so they can invest outside of Chile. But they're a big element in the market. They're there, maybe 30% of the total market is pension funds.
Because we're also seeing more of a guarded attitude. For example, Saudi Arabia is a good example of being extremely careful of how they protect the domestic investors, right? They sort of make us jump through a bunch of hoops to get into there.
Exactly.
Pakistan, similar. We seem to see a similar attitude in Brazil. I mean,
Yeah.
it's an interesting dimension to think about. Is global investing going to be a game of tricks, or do you think it's just, or the global flow is stronger than all those personal agendas of countries?
I think you're going to have to look at the individual country.
Right.
For example, you're finding when things get out of control or things turn down, the easy people to blame are the foreigners. So us foreign investors
Evil foreigner.
could get the stick, that's the kind of thing you're going to get. But when things are going well, that's fine, no problem.
Yeah.
So we've got to be careful. We've got to be part of the nation, part of the ethic of the nation. We've got to respect, their way of thinking. But at the same time, tell them, look, we're here to make money, just like the domestic investors here. And a lot of people think you're taking money out of the country, but if you're selling, you've got to sell to somebody. Somebody else will have the same thing. They may do well, they may not. So there's a lot of education to be done in that sense.
And on that note, education, I think you also, I think you very elegantly dealt with these social uprisings that we're seeing, because literally I think rising economies are in their adolescence, but literally speaking because of the demographics, right?
Exactly.
And we're all connected, and it's very easy now for people to influence each other on expressing their opinions. So this is, I think we managers have to learn to tell this to the institutional investor in our world, that this is actually going to be like this for the foreseeable future. Would you agree with that?
Absolutely. I think one
It's
of
an
the things.
assertive world.
No question about it. The thing that really left us blindsided was the impact of the internet and of cell phones. Because now everybody has these smartphones. You can go to Africa and they've got a cell phone, even though they're in a lower economic group. And the impact of this is tremendous politically. And that's what blindsided the Brazilians, I believe, and even in Turkey, I think the government was blindsided. They didn't realize the impact this would have. If one little spark sets off something, they tweet this or they YouTube this or whatever, and before you know it, you've got a lot of people without a leader necessarily out on the streets. So this is going forward, is going to be very, very important.
Yeah, and it's more important than it is actually the middle class expressing an opinion, which is even more interesting.
Exactly.
Because they do have the consumer power, and in the end, the way our world works is that's who you have to listen to, right?
Yeah, exactly. So it's going to be quite an exciting time. And things are moving a lot faster.
Yeah.
And in many ways, the young generation now is much more mature than generation 50 years ago.
Absolutely.
Because they've got the information. The transparency is increasing dramatically globally.
Very interesting. Thanks, Mark.
Thank you.
Great talking to you, as always.
Right.